Hello, everybody. Welcome to Bedrock Business Builders, where we help entrepreneurs start, build, and manage their own small business successfully. And in this free webinar, I'm going to be talking about why almost everyone should own an S Corp. But before we get into the actual content, I want to point out that I am a CPA. I am not an attorney. This is for informational purposes only. I'm not advising anybody to open up their own S Corp. I am merely providing information on a topic that I've employed successfully for clients, but this is not for everybody. So if you want to go forward with this, make sure that it's done legally. More importantly, that it fits with your objectives. Now, let's talk about who this webinar is for, because it's not for everybody, but I can tell you that it's definitely for sole proprietors, LLC owners who are still considered sole proprietors for tax purposes, wage earners, and retirees that are tired of paying high taxes, want more control over their finances, are interested in creative legal ways to reduce their taxes, need to protect their family and their assets, and I don't know anybody that doesn't need to do that, and also want flexibility and options in creating wealth and transferring their assets. So let me introduce myself. My name is Joe DiChiara. In 1984, I became an accountant. I graduated from SUNY Oswego with an accounting degree. 2 years later, I passed the CPA exam. In 1988, I was granted my CPA license. And in 1994, 10 years after I started, I opened up my first CPA practice. So obviously, I've been a CPA over 30 years. In all that time, all I've done is tax preparation, research, and planning for small businesses. And I've worked with thousands of small businesses, if you can believe that, over 30 years in one way or another. And I've actually handled tens of thousands of tax returns, either directly or indirectly via reviewing, processing, whatever. But I've gone through a lot of tax returns. And I've also completed hundreds of tax audits. Why am I saying this? Why do you need an S Corp? You're saying to yourself, do I need an S Corp, and why, and how does it help me? Because that's really all that matters. Otherwise, we're wasting our time here. Let's take a look at the facts. Okay, according to the SBA, the Small Business Administration, over 50% of new businesses fail in the first 5 years, and 70% will fail in 10 years. The real figures are even worse. According to Bloomberg, 80% of small businesses that start out are gone in 18 months. Now, you could go through all kinds of numbers. The fact is that the situation is not good for a small business owner. And here's the scoop. Okay, most entrepreneurs start out as a sole proprietor and stay that way. Now, most of those new businesses start out as sole proprietors and they are bankrupt in a few years. Being a sole proprietor decreases your odds of success because sole proprietors get audited the most. Sole proprietors pay 15% self-employment tax on net profits. There's no legal protection. Now, LLCs get the legal protection, but they still get items 1 and 2 checked off. Sole proprietors get no respect from the business community. Why am I saying that an S Corp is a solution? Number one, S Corps rarely get audited. Pay 0% self-employment tax on net profits. But with an S Corp, you do not pay any self-employment tax or Social Security tax on net profits. Legal protection for you, your family, and your assets. You can gain business credit separate and apart from your personal credit, and you're taken more seriously as a business owner. Now on the golf course, you're not, oh, I'm Joe DiChiara, consultant. Now I'm Bedrock Business Builders Corp. I have a corporation. It's just the way it is. It's people's perception. I base this on 30 years of seeing it firsthand. When you're going for a bank loan, if you're a sole proprietor, you get the short application. If you're a business, if you're a corporation, you're going to get the longer application. So let's take the first example of how an S Corp would benefit a sole proprietor. Let's say the sole proprietor has, for argument's sake, $20,000 in net profit. Now, unfortunately, in the United States, there's a lot of those 25 million sole proprietors operate at or below the poverty level. $20,000 net profit for a sole proprietor, below the poverty level as a sole proprietor, that's their source of income, and they still got to pay $3,000 in self-employment tax. That sole proprietor next year creates an S Corp. He has a $20,000 net profit and he's paying $0 in self-employment tax, and that's a $3,000 savings. Now, I understand that there's going to be people out there saying, oh, but you got to pay yourself a salary and, on a $20,000 profit. And if everything's relative, you got to take each situation on its own. And what I'm talking about is the reasonable salary concept that the IRS has. And they say that, okay, every corporation that's being run by an individual, you can't have $1 million profit and take no salary. So granted, let's say for the $20,000 profit, we do a $5,000 salary. Do the math. You're still not paying Social Security tax on $15,000. So what happens when you create your own corporation, you're going to feel like Superman or Wonder Woman because you did the right thing for your family. Now, let me address the people that, oh, I'm already an LLC. Well, this is what I say to them. That's great, but you get the same legal protection as a corp. But issues, still taxed as a sole proprietor, like I said, still pays self-employment tax on net profits. You still got that high audit risk. Now, I've been talking to a lot of sole proprietors over the last couple of months, and the amount of times that sole proprietors get audited, or it's even worse than I thought. And you still get no respect. The solution, okay, there is a solution. So now if you are an LLC, there's 2 steps that you might be able to take depending on how long it's been and if you filed returns yet. The first solution is Form 8832, which is the IRS form where you get to classify how you want to be taxed. Okay, so you can be an LLC and elect to be taxed as a corporation. And then the next step is if you want to be an S Corp, you're going to file for what they call late election relief. That's sole proprietors, LLCs. I just covered the benefits of being an S Corp for about 26 million Americans because that's all US-based businesses. Now, for wage earners and retirees, here are the issues. Paying high taxes. Thanks to new tax law, we're limited to how many deductions we could take. It's basically, if you're a wage earner or a retiree, the only tax shelter, realistic tax shelter, is real estate. Or your other option is to try to invest in investments that appreciate in value. Other than that, you have limited opportunities to create wealth. You have limited opportunities to reduce your taxes. That's it. It's black and white. You're a wage earner and you accept that you're going to pay 30, 40% of your wages in taxes, or you can do something about it. So how is creating an S Corp a solution for this market segment? First of all, many wage earners and retirees are already sole proprietors. Okay, if you're part of a network marketing business or you sell Avon or you're an Amazon affiliate, believe it or not, you're in business. If you're doing that, you're classified as a sole proprietor. And guess what? The government's getting better at tracking everything. So, and I've seen this happen a lot of times now. People with eBay businesses, all these online businesses, You're getting a 1099 at the end of the year. So when you get a 1099 for $10,000, $20,000 and you don't know how to write off your expenses, you can get slammed. So if you are already, I've covered why, because now when you're an S Corp, you could safely write off your business expenses. And not that they weren't legal before, they're still legal, but you don't have that. And believe me, it's like a 98% more chance of being audited when you're a sole proprietor. When you're a corporation, you never know what kind of opportunities are going to come up. And if you're incorporated with the right paperwork, the right licenses, you got a better shot at landing deals. And I'll give you a good example. I have a client, construction client, sole proprietor, new client. He's in line to get the biggest job of his life, but because he wasn't incorporated, he doesn't have workers' comp insurance, and he's not licensed the way, the architect needs them to be, they may not get the job. So they hired me basically to incorporate them, get them all legal. They were doing everything legal before, but remember what I said about the respect. They refuse to do business with sole proprietors, the architects, the people that get and give smaller contractors jobs. You do not want to be a sole proprietor because last but not least, you gain status and respect, and you get tremendous financial and tax planning opportunities. And if you're lucky enough to become rich and you want to start transferring assets, it's much easier to do it through corporations and trust, which is another subject that I'm not going to get into. But the point here is that you don't have these options as a sole proprietor. Okay, so now let's talk about how this would affect a wage earner or retiree. Let's say $100,000 in taxable income, 30% tax rate, and they wind up with a $10,000 business loss. As a sole proprietor, you can get audited when you show a $10,000 business loss on a Schedule C. As a corporation, this happens all the time. To be honest with you, it's going to happen all the time, whether they're incorporated or not incorporated. The difference is when you do it as a corporation, you really don't have to worry about the IRS auditing you. And if they did, if you kept your documentation correct, you wouldn't have a problem. So that would be a $3,000 tax savings. A lot of people would ask me, I'm retired or I got a full-time job. How do I start my own business? I don't have enough time. How do I do it? Well, there's actually 2 steps and they take less than 30 seconds. And let me tell you what they are. The first thing, you have to think about a business. Next thing is you take action. You're in business. You just may not have formally created a business, which is what I do. I'm going to take that idea and that action and make you an S Corp. Then you might ask, well, how can a retiree legally write off business expenses? Well, I'm going to tell you. The rule is that when you go into business, you can take your personal assets and contribute them to the business, and the percentage of business use you can write off. So I'm talking about expenses you already have. So a big part of the beauty of being a wage earner or a retiree or anybody that starts their own business is that we could actually take expenses that you have anyway and convert them into business expenses. Because once you decide to be in business and you take that action, all of those resources and tools that you have laying around your house, like a desk, a computer, the file cabinet, the bookshelves, those could all become part of your business. In concept, you could understand that you have an office in your house and you're entitled to take a percentage of it. But I think people get lost sometimes in the idea and lose track of actually how easy it is. So I'm going to give you an example here. And this is a little short spreadsheet that I just created. This is about all we got to do is keep track of how much we're spending, what's the actual business use percentage, and then how much can we deduct. And now this, as an accountant, these are the numbers that I'm going to use to post into your books, which wind up on your tax return. So for instance, this case, we have $2,000 a month in rent. Okay, we had repairs done and we had an exterminator. Now, these are what they call indirect expenses, meaning that only a portion of them are business use. And I came up with that 15% this way. 5,000 square feet. The office is 750 square feet. It's 15%. Pretty simple. Now, once this template is done, you just have to fill in a couple of items here. What, 1, 2, 3, there's 5 items. This should take somebody about 8 minutes a month to put together. And it will seamlessly go right into your bookkeeping system, which is the next step after this course. You know, you could see that now in this case, we had $5,300 in expenses that we would have had anyway. By converting it to business use legally, we got a $2,600 tax write-off. Over here, we have a couple of items that are 100% because they were directly attributed to that office. So you could see over here, we just have some categories. You know, it's very simple. It's not complicated, but if you multiply that by 12, that would amount to $32,000 in business expenses a year that you could legally write off. Now take, if you're in the 10% tax bracket, which nobody is, that's $3,000 in tax savings. If you're in the 20% bracket, that's $6,000 in tax savings. Pretty big incentive if you ask me. So now what we do with a countable plan I just showed you, we can do a similar thing with petty cash. You see, there's a rule in tax law that's called the de minimis rule. And anything under $75, you don't actually need paper document receipt. What you need to do is you need to document the expense in your books and records. For instance, I go into the post office and I spend $55 on stamps. Now, I don't like using my debit or credit card in a lot of places. So a lot of times I'll just take cash out, and then if I'm going someplace like Staples or the post office, I'll pay cash. Now, yeah, I get the receipt, but now if I had to keep all those receipts, what a mess. Okay, so thankfully we have an easier way to do it. I just note it in my logbook, which is another method of another way that I manage my business. Mark it in my logbook, stamps, purchase, this, the date, how much, where I was, which is documented already by my GPS. I put it on a schedule, just like the schedule you just saw, and that becomes my petty cash journal. Also, I mentioned, you know, if you have existing furniture and equipment, your car, for example, that's always a big one, computers. And I don't want to get into the technical details, but you would take what the fair market value is of those assets and contribute them to the business. Okay, now these are all perfectly 100% legitimate expenses that I have seen people overlook for years. And even when they don't overlook them, if they're at Schedule C, you are opening yourself for audit. So my conclusion is that S Corps work well, sole proprietors, wage earners, and retirees. Okay, so you might be wondering, okay, what's the next step? And here's what I recommend. Decide if being an S Corp is definitely right for you. Like I said at the beginning, it's not for everyone, but it's for a lot of people. Once you decide it's right for you, you should incorporate, open your bank account, set up your bookkeeping, and hire a new accountant. Because if you're getting this information from me and you didn't get it from him or her, they're not doing their job. That being said, I do have a very special offer for you where I'm going to help you take your idea and turn it into an S Corp via a 1-hour recorded webinar. It's not even an hour. So you can do this in less than an hour. From your idea, if you woke up this morning, in less than an hour, you can have your own S Corp. I'm going to show you how to incorporate in your own state, get your tax ID number, and open up a bank account so you can start making deposits and writing off all of those expenses we were talking about, which will lead to huge tax savings. Okay, and by opening your own S Corp, you will also be helping protect your family and your assets and a lot more, much more that I didn't even have a chance to get into. So this is a do-it-yourself webinar. In other words, I'm going to show you how to do it. And I put the value at $500, and that's not just an arbitrary value. If you go on LegalZoom or any of these other do-it-yourself sites, which they really are, it's going to run you over $500 to do what I'm going to charge you only $47 today. Plus 30 days of free unlimited support, and I will help you get this all set up. 30 days of unlimited free support and 100% money back guarantee. Now it's only $47, but if for some reason you're not completely satisfied, I will give you back your $47. Now if you don't want to do it yourself, which I really don't recommend you do it yourself, to be honest with you, but I give you the option and all of the tools and resources to do it, I can do this all for you. And the way I do it is I'm going to help you choose your business name. I'm going to research your state business requirements. I am going to incorporate you in your home state. I'm going to get your tax ID number for you. I am going to guarantee that you get off and running on the right path. Okay, so now most places charge a lot of money for this kind of service, and I charge $750. Most places charge, I'm hearing $1,500. I just got a client that paid $2,500 just to set up an LLC. But my offer to you today is only $197, which is a ridiculous price for the amount of time that I put in. But I want to get you started off right. And let me, stress here, there's no obligation for you to hire me to do any other services, bookkeeping, payroll, tax preparation. I mean, we do all of that, but there's no obligation on your part to hire my firm to do any of that. So like I said, it's only $197. And again, plus I'm going to give you 30 days of unlimited support. So I'm not only going to set you up with your corporation so you can open up your bank account, I'm going to make sure that you got your business running from the ground up, which includes setting up your bookkeeping system. So I want you to open up your bank account and start doing transactions, and then you're free to do business and make money. And again, I give you 100% money back guarantee on this. So I hope that you will take me up on this offer. If you take the platinum package, I have another bonus for you. You're going to get a free hour of business coaching. I'm also going to give you a free copy of my amazing itty bitty bookkeeping book, which was a #1 bestseller, and my new amazing itty bitty S Corp book. And all you have to do to get this is go to scorpswork.com. And you could pick either package. If you have any questions, feel free to contact me, joe@bedrockbusinessbuilders.com. I look forward to hearing from you. Thanks.